Hello and good day. This is Mark with Quantum Forex. We are starting the trading week of October 16th. It's Sunday. And I'm going to do a little bit of a different setup here today, different strategy in what I'm bringing forth. We're just going to look at one currency, and that is the Euro USD. And I want to talk about support and resistance. We're going to take a look at a little simpler chart to start with, where all I have up here is a momentum oscillator. As a matter of fact, I'm going to go ahead and delete that off of there. Truthfully, trading is really not about how many indicators you have up. You can do a great job predicting the market and trading without a lot of indicators. And the number one thing that you want to learn when you're learning to trade is support and resistance, both horizontal and diagonal. Diagonal resistance we call trend lines. You can have a trend line for support and a trend line for resistance. When you have two diagonal support and resistance or trend lines together, they create what we call chart patterns. And I'm going to show you a chart pattern that's clearly developing here on the monthly euro. We're going to start out with the monthly. And as I teach in my classes, you always want to start from the top and work your way down to give yourself an overall perspective of what the market is doing. Excuse me. So we don't generally start at the monthly, but when the markets are doing a little bit, some things are a little bit erratic, like they did last week, where it just kept the New Zealand USD kept going up, and we are expecting a top out this week. But it created some trading opportunities for us, but we had to be a little on our toes to see what's going on the 1 hour chart and the 15-minute chart. Now, what we're going to look at here is the monthly, and we're just going to start by drawing some trend lines. And we teach this in our basic course. It shows you where the market's finding resistance and support at. And here we have right here, we found that we've dropped down through, and look how we've bounced twice off of this area. Now I'm going to move through this quickly because I do want to get to the overall strategy that we're looking at for this week. Here's another support here. We can see that there was a resistance, a support, and yes, the market pierced through, but then it did find support here again. So technically what we call this right here is we're in somewhat of a channel. Okay, and when price finds a channel, we call it a range-bound trading. It'll tend to bounce through that channel. And it'll also tend to violate some other Elliott wave or other technical principles as it's bouncing through that channel. But now look at what else we have. If we pull in some diagonal, we can see what could be a bit of a almost call that a symmetrical triangle in here. Okay, so it appears that we came down and bounced off of this support here on the euro, and are heading up. Okay, now I'm going to jump down now to the weekly. One last thing I want to put in is another possibility. Now, when you're trading and you're looking at these long-term charts, we certainly aren't going to take any trade decisions off of this. This is predictive. This is analyzing the charts. We're predicting. We're just trying to get a feel for where are some possible turnaround points. And as we know in history, history tends to repeat itself. In the charts, history tends to repeat itself in the form of patterns. And when you can begin to identify patterns, and simply by drawing lines and connecting the tops and connecting the bottoms, you can begin to get a feel for what is the market doing. Well, it seems to be finding some kind of a range in here. And so now that's going to give us an idea. Let's keep looking at this as the month goes on and see, is it going to drop down here and bounce again and then kind of confirm that we're in these horizontal range bound, or is it going to keep bouncing back and forth in here and confirm we're in a diagonal range bound? And there is a way to play both of these in your trading at the lower level time frames, and once you identify where possible turnaround points are based on history. Okay, now we're going to go down to the weekly. I'm going to show you some other ideas here. I'm going to dial this in just slightly. I'm going to show you some other patterns that repeat themselves in the form of Fibonacci levels. Okay, remember I've talked about the 127% extension and the 161% extension, and these are levels that the market, and the market is made up of millions or tens of millions or hundreds of millions of people. So people are respecting these price ranges, and if we pull a Fibbo level, pull it back from the top to the bottom here, look at this 127%. I mean, that's just almost to the pip, and it turned around on that. That's why I speak so often about look for the 127% extension and try to qualify a trade in there, because you can. Those are 70% of the time you're going to be able to get something off of a bounce off of those. Okay, so that's the 127%. I talk a lot about the 161% and the 61.8. Let me show you a 161 bounce that we just recently had. Come right to the bottom here and pull up, and look at how we came almost to the pip on the 161.8, and notice how this is that diagonal that I showed you on the monthly right here. So had we seen this trend line and analyzed this, and we saw bounce here, and then we see that the 161 is lining up with this 161 extension was lining up with this support area, this diagonal support, that begins to be an area of possible interest. Now, how I would have drawn that is I come down to my shapes, and I like zones. I don't like to try to get things right to the pip. So what I do is I say, okay, look, we've got a zone that this diagonal support goes right through. So I'm going to be looking for a buy somewhere in this zone. And sure enough, we bounced off of that. And look how many pips that if you would have just taken a bounce off of a 161, whoops, how many pips would that be so far? Well, shoot, that's over 700 pips that the market respected off of that. And we came off of a 127 up here, a bounce off the 127, and it came down for that's almost 4,000 pips off of this 127% bounce. Okay, actually on this one we're looking at the monthly. The monthly, okay, that's different than the weekly we were looking at. The weekly is pulling from here to here, and we got that was a 127. The monthly, this monthly is a little bit different scenario. But at any rate, it came into the 127, 138% zone. And so again, how I look at those is like so. I draw a little zone, and I say, well, if we start looking for some smaller patterns in here that are reversal patterns based off lower time frames, then we have this larger time frame reversal that we can look for. Okay, let's go back to the weekly. Let me clear some of this off of here. Now, something else I've showed you is what we call harmonic patterns, and I want to show you one here. Notice how we came into the 78-88% zone on this move down. Okay, and the first leg down came right down just below the 50%. So that's a harmonic pattern. I'm going to get to our trading here in just a second, but I want to show you some of the patterns that do repeat themselves over and over. And this particular one is one we call a bat. I'm not going to worry about changing that color right now. Okay, that's what we call a bat. And this first leg comes down to a 38 to a 50, and the second leg comes down to an 88, which it was just a few, maybe 20 to 50 pips away from that. And then what we look for on that is a retracement value of 50%. And again, I'm not expecting those of you who are new to Forex to understand everything I'm telling you. What I'm trying to show you is that there are mathematical calculations that we use to trade. And see, we'd expect this leg to come to a minimum of a 50%, which it already did. So if we can capture one of those that come down to this area, then we go ahead and set our take profit off of one of these at the 50%, which is 696 pips. Okay, so that would have been a trade to catch off of there. And by the way, that coincides with what happened with the New Zealand USD when it came down and hit that butterfly that I spoke of 2 weeks ago. Okay, so that's all well and good for history. Let's look at now where we might be going from here, something we can trade this week. And for that, we need to come down a little closer to home into our daily chart. And then we'll drop down to our 4 hour and our 1 hour. So now what we have to do, we look at this big leg moving down, and we've moved right back up. And we say, okay, because we know that Fibonacci levels repeat themselves, patterns repeat themselves, is there any pattern level here, any Fibonacci level that might be creating some patterns? Okay, in order to do that, what we'll do is we come up here to our last high before this move down, and we'll pull a Fibonacci. And the most common Fibonacci level is a 61.8%. Notice how we broke the 50, and look, we had this EMA 62 sitting right there, this blue line, which you can put this on your chart, it's very easy to do. Notice how we found resistance there, and that was at the 50%. Once we broke through, our next target on this is the 61.8. And notice how that's also at this EMA 200. Notice it says moving average 200, and that's my fuchsia line. Now, if I was to draw a horizontal resistance line and pull out to the weekly, you would notice that that is where market has found some support in here, some resistance in here. Notice it spiked above, but the bodies mostly close on or around that line. Same thing over here. Okay, so this is a legitimate resistance level that this market is coming up into, and it'll get there this week. So when we see on the daily, back down to the daily, when we see on the daily that we're coming into that 61.8, we want to pay attention and go down to our lower time frames to see if there's anything that we might be able to trade. And that's where our 4 hour chart begins to come in. Okay, let's see if we can find any Fibonacci levels here. Let's pull back from this move here to the bottom. And look, our line comes in exactly at the 161.8%. Okay, is it going to get there for sure? We don't know for sure. We don't know anything for sure. If anybody tells you in the market that they know exactly what it's going to do in the future, run. There's no possible way. In order to know exactly what the market's going to do, you would have to know what millions of people at the same time are thinking in 100 countries around the world where people are trading, and what everybody's thinking at the same time. It's impossible. All we can do is look at patterns and see what the general crowd theory is. And that's really what the study of charts is. It's just general crowd psychology. What do most people do? Well, most people, it appears, respect this 161.8, 178% zone. And so what I like to do then, of course, is to come in here and put a zone in. And see, that zone just happens to be on this weekly chart, will be right in this massive area of massive support and resistance. Okay, so that's a very high likelihood turnaround point. So what are we going to look for when we get up there? Well, we would look for, on our Bollinger Bands and our stochastics, which I don't have on here yet, we would look for some more indication that there's a turnaround. So now we can add filters in. And that's what we're going to do on this other chart. Right here I already have the Bollingers and the all that set up. Okay, so now look what we have here. On a momentum oscillator, we're starting to point down, which shows on the daily chart our momentum's heading down. Our stochastics is almost to the top, which shows that we're getting overbought. We're moving up to that area that we described, at 61.8% retrace. which is also on the 4-hour, a 161% extension. We're moving right up into that. And when we get there, we'll be overbought and we'll have divergence. Will we have it on the 4-hour? Yes. We're hanging at the top of the overbought and we have divergence on the 4-hour. Same thing on the hourly. Okay, now as we get closer to that point, no reason to do it now, we can even dial all the way down to a 5-minute, which right now would just be confusing to look at. But if and when we get up here, let's look for a buy and dial down to our lower charts to see if we can see some even further patterns. Now, don't be disturbed if we go higher, because we're going to qualify this. But if we go higher, at some point it's got to come down, and it's likely that it's not going to go above all of this resistance up in here before it drops. Because remember, price moves in waves, and so far we haven't had a significant retrace. So we're looking to get in on this significant retrace. Now what happens if it doesn't come up to this, but it just starts dropping right now? That's okay. We have a way to catch that. What we do is we'll drop down to, say, our 15-minute chart, and what we'll look for is what we call a 1, 2, 3 setup. We'll look for price to move down. Alright, so what I'm going to look for is a significant move down on the 15-minute chart, and then a move back up, not to break the tie up here. And then what I'm going to expect is for a drop back down after that. It's called a 1, 2, 3. This is the 1 point, 2 point, and a 3 point. But we have to have a significant breakdown. This is not significant. Okay, we need something that is an impulse move down, and preferably if you can count a clean 5 waves. And then we're looking for a pullback, and that'll show us that our move up is over. Now if you can get that on the hourly, all the better. If this hourly moves all the way down to here and then comes back up, that'll be a time to get in, and we look for what we call a trend line break. Okay, so if price does this, moves down and then bounces back up and comes back up close to the trend line, that'll be a chance that we can get in on this, even if it doesn't come all the way up to our expected top, because truthfully it can reverse at any time at this point. It's just the ideal place is if it hits our 61.8, tops out on our stochastics, and that's also on the 4-hour, that 161.8% extension that I showed you. Let me go ahead and pull that in again. Okay, so that's what we're looking for today. We're looking for this sometime this week to top out somewhere. We're looking for a top, and then we're looking for this to drop down. I'm going to cover more of this in my mid-market update, my midweek update, I mean. We're going to cover more of this. But if we can get up into that area, which I think there's a good chance we'll get close to it, we're going to be looking to find support somewhere down in this area. Okay. Now, we're not just going to go all out and throw all of our money in at this point. If it gets down in here, we're going to qualify it, because it's quite possible that we're into an overall range-bound pattern that we have to be aware of. And we'll talk about that more in the midweek update and see where this goes to. Right now we don't need to worry about this, we just need to be aware of it. Even if this is the pattern we're following, okay, it's likely to still come back down and retest this again, which is indeed what we're looking at here, is at least coming down to here and possibly blowing through down to retest that larger support area down in here, the lower support area, which would tend to line up possibly with our stochastics, which haven't quite bottomed out yet. So we'll be looking for what this does later on, but right now, this week, and at least early in the week, we're looking for a top out and then a drop off down into somewhere into this area. Okay, good luck, good trading. If you can't see these videos in detail, go ahead and just click the link. It gives you a larger HD format. You can view them then. Have a great day.